Hello everyone, it's Wednesday, August 6th. Today we're analyzing the euro and British pound charts to assess potential market trajectories. During the first half of the previous trading session, the euro came under pressure, dragged down by disappointing data on business activity across the euro area. The final services PMI for the Eurozone slipped to 51 in July, falling short of the expected 51.2. The composite PMI also missed forecasts, reinforcing concerns about the bloc's economic momentum. However, sentiment shifted later in the day following similar data out of the United States. The ISM Services PMI was revised downward to 50.1, suggesting near stagnation in the sector. Economists had anticipated a more robust figure of 51.5. The weaker-than-expected U.S. data triggered broad dollar selling. In addition, President Donald Trump renewed his threat to impose tariffs on pharmaceuticals and semiconductors. He also warned of secondary duties targeting countries that continue purchasing energy from Russia. These comments further waned on the greenback. Now let's turn to today's macroeconomic calendar. Germany has already released its factory orders data, which came in below expectations. Orders fell by 1%, defined forecast of a 1% increase and raising fresh concerns about the health of Europe's largest economy. Still ahead are several key indicators: non-farm payrolls in France, industrial production in Italy, and retail sales across the euro area. The latter is projected to rise by 0.4% in June, following a 0.7% decline in May. However, unless the actual figure deviates sharply from expectations, its market impact is likely to be limited. On the US side, the economic calendar is relatively light, with no major data releases scheduled. However, attention will shift to public remarks from Federal Reserve officials Susan Collins, Lisa Cook, and Mary Daly. Traders will be watching closely for any signals regarding future rate moves and reactions to the recent strength of weak US jobs data. Following yesterday's disappointing services PMI, market expectations for a Fed rate cut in September have intensified. And additional signs of economic softness could reinforce those expectations, applying further downward pressure on the dollar and opening the door for gains in the euro and the British pound. Turning to technical analysis, the 1-hour EUR USD chart indicates that a decline followed by a false breakout at 1.1555 could generate a buy signal, potentially pushing the euro toward the one-week high at 1.1594. A breakout and firm consolidation above this level would open the path for further upside toward 1.1637 and possibly 1664. Around 1664, I would consider short positions on the rebound, aiming for an intraday pullback of 25-30 pips. Short entries at 1637 or 1594 would be relevant following a false breakout, with the target set near the midpoint of the range at 1555. A break below this level could extend the downside toward 1518, where long positions would be appropriate on a false breakout. Long positions on a rebound would be prudent at 1479 with an expected intraday correction of 35-40 pips. As for the British pound, attention is centered on the midpoint of the sideways channel at 32.89. The current range-bound environment still favor bulls, so a false breakout at 1.3289 would generate a strong buy signal, especially if UK construction data exceeds expectations today. The July construction PMI is projected to come in at 49.2. A stronger than expected reading would support further upside in the British pound, potentially pushing the price to 1.32 33.25. A breakout above this level would open the way for a move toward 33.75 with the possibility of extending gains to 34.22. At these levels, short positions on a rebound would be justified, aiming for an intraday correction of 25-30 pips. Short entries at 33.75 and 33.25 should only be considered if a false breakout is confirmed, with the target set at channel midpoint of 32.89. If UK construction data falls short and the price holds below 32.89, sterling could dip to 32.55, potentially extending weakness to 32.17. In this case, long positions on a rebound from 32.17 would be appropriate, targeting a 25-30 pip move. Long entries at 32.55 and 32.89 would be relevant following a false breakout. Good luck to everyone.